Are you interested in increasing exposure to US assets at this point, or are you following the vaccine rollouts through Europe and into Asia? What's the strategy?
Anna, thanks for having me. Yes, I mean, we're clearly interested in the rollout. The data from the US is incredibly strong. Growth really does look very compelling. There's a lot of talk about inflation, and, that's definitely a very important factor. I was interested in Mark's analysis of FX volatility, and it brings to mind the notion of sell in May and go away. We actually think there is a risk to volatility on the upside because central bank accommodation has been so pronounced. Inflation definitely a challenge, and the balance of risks are shifting.
Good morning, Patrick. So if you're generally pretty constructive overall, but you're worried that there's a little bit of a complacency on the volatility side, does that mean you expect positive returns for stocks in the second half of the year, just not matching the first half returns?
Well, we do. I mean, I think, but it's very important that you decide what area of the stock market you're looking at. And we firmly believe that actually, this rotation to value is something that we're very interested in. We see, central banks accommodation beginning to tail off. I mean, the Fed obviously making some announcements. The Bank of England, in fact, meeting today, as your correspondent noted. And we'd expect a change in tone there, not necessarily a signalling of higher interest rates, but perhaps, an end of QE or the beginning of the end. And so what that tells us is that there is a path to normalization of rates, and that has an implication for stocks that, need higher rates. And one thinks here, particularly financials, which, of course, a very large part of the index here in Europe. And so as they can generate more sustained profits, that has clearly a factor that we need to weigh and consider.
Let me ask you about the search for uncorrelated assets then, Patrick, at this point, because that's something we talk about a lot with guests. We've recently seen some volatility, certainly in equities and in fixed income, but it had been calm for a little while. And so talking about uncorrelated returns, I know has sent you with an ESG hat on into new areas, and timber management, forestry management is one of those, Patrick. What does that kind of asset bring to a business such as JPMorgan in Europe?
Sure. So yes, we announced partnership with Campbell Global, which is one of the leading timber asset managers in the world, and we're really thrilled to have that capability because for a couple of reasons. I mean, to your point, what investors want is they want a diversified source of return. So timber does generate a yield, and that's very important in a very low yield environment. It acts potentially as a hedge against inflation, but I think most interestingly, there's a whole component around carbon sequestration, and particularly in the context of all of the things that are going on in ESG at the moment. Our clients really want an exposure to asset classes that meets some of those goals. And I think forestry, obviously natural carbon storage. So we're delighted to welcome them and their team as one of the leading timber asset managers into our fund.
You're speaking on a panel later on today on the role of City Week panel on the role of recognition and incentives in promoting healthy cultures. Can you give us a quick sneak preview of how that kind of role of incentives has changed due to the pandemic?
Sure. I mean, I think the panel's really about culture, and I think culture starts with leadership. And I think it's really important that not only is it sort of setting a tone and setting an example at the top of the organization, but also making sure that managers know how important culture is. So we spend a lot of time and effort thinking about that at JPMorgan because it really defines, the purpose for the company. And that's particularly important for an asset manager where we're a fiduciary, so we act in clients' interests first. So culture, an incredibly important part of what we do. And incentivization, that covers many things. That's not just pay, it's also career development, recognition, career mobility. So an incredibly important part of what we offer to employees here. And I think, to your point on COVID, I think putting employee welfare really at the top of the list and making sure that you've got all the resources available to look after employees, I think has been a really incredibly important part of what we've offered to employees through this period.
Patrick, with that in mind, what's the return to office plan for the EMEA region? We've got a story out overnight that talks about JPMorgan warning employees it may require them to be vaccinated. Perhaps that's more of a US story at this point. I wonder what reflections you've given to that here in Europe. It must be very difficult to manage global businesses with very different vaccine rollouts in different parts of the world.
Yeah, I mean, I think it's challenging for all businesses. I mean, I think our view is, look, we look at government guidance first. And of course, that's very different in each country. The UK just announced, obviously, potentially a change in stance on July the 19th. That's very different to what's happening in France and very different to what's happening in Italy and Germany. And Germany, the vaccine rollout now, I think over 50%. So we're really looking at government response first. What is the government guidelines? Then, to my earlier point, looking at employee welfare and what are the main things that we need to do to make sure our employees are safe. Clearly, we want to encourage people back into the office in a measured way. So we're going to be just evaluating, as I said, all of these factors to come out with, a set of policies that really meets all those requirements through time.